We work solely on a success fee.
Welcome to the Service to Syndication Podcast, where we interview the biggest and most successful real estate entrepreneurs, investors, capital raisers in the world who have worn the uniform of this great country, those who provide services to our men and women in uniform, and other service-oriented professionals to provide you with the tool sets, the mindsets, and the skill sets to help you conquer your dreams and goals in real estate and to use this wealth creation vehicle so you can live a more successful, happy, and fulfilled life of generosity and prosperity. If what you desire is time, lifestyle, and financial freedom, you've come to the right place. We will bring to you the best real estate entrepreneurs who will give you the insights, the knowledge, experience, skills, so you can go out and crush it in whatever real estate asset class you desire. So grab a pencil and paper, sit back, and enjoy the ride on the Service to Syndication Podcast.
Hello, my servicemen and women and other service providers. Welcome to another episode of the Service to Syndication Real Estate Podcast. I am your host, Cedric Marlow. I am a U.S. Navy vet. Here on the Service to Syndication Real Estate Podcast, we interview the most successful real estate entrepreneurs, investors, and capital raisers in the world, where most have donned the uniforms of our great country. We aim to provide the tool sets, the mindsets, and skill sets for you to achieve your personal and business goals while using real estate as a wealth creation vehicle to help you live a more successful, happy, and fun-filled life. I am super excited today because I have with me commercial real estate broker, Mr. Gregory Funk. But before I properly introduce our exciting guest to you, I want to ask a favor of you. Please, if you get some value out of this interview, if you get some type of insight, mindset shift, if you learn a new skill, receive inspiration or motivation to go out and make some progress in your life, please share this episode with some of your friends. Send it to someone you know who might be or could be interested in real estate. Share it on your social media, post it on your wall, or share it in your stories. Help us spread our message while you help others. And for all of you who share this episode, I want to say thank you. Everyone, again, I have with me Mr. Gregory Funk. Gregory is the president of Momentum Commercial Capital, where he helps real estate investors simplify and secure financing tailored to their goals. His firm specializes in sourcing debt and equity for a variety of asset types, multifamily, retail, medical, and more, offering solutions for acquisitions, refinances, development, and repositioning. A U.S. Air Force veteran who served as a load master from 2011 to 2015, he brings a mission-driven mindset to business, focused on client success, strong relationships, and long-term value. Outside the office, he enjoys outdoor adventures, mountain biking, dirt biking, and quality time with his family. All right, Gregory, welcome. So the first thing that I like to do with my guests is kind of have us walk us through your real estate journey in 75 seconds or less.
All right, so I started when I was in the military. I bought a house with a VA loan, and when I went to leave, I couldn't sell it because I would have had to pay $7,000 to close the loan since it was zero down. So that became my first rental from that point. And then I moved back to Ohio. That house was in Texas, so I was managing a rental in Texas. Did that for a few years. Finally was able to sell it and realized, I don't really like managing tenants. I want to become the lending side of it. And so I actually don't own any real estate right now. And I just focus on the lending side. And then I like lending money as opposed to dealing with tenants and maintenance.
And that's probably not bad at all, because trust me, it can become a headache. It definitely can. So, hey, look, at least you're providing the money to those people who are willing to deal with that type of headache.
Yeah, that's true. And I did a partnership with my brother on another rental in Cleveland, and I thought it'd be better. And then I was managing tenants and my brother, and then a property management company, and I was like, all right, I don't like this. There's too many people to manage. I want to manage my money and help people get the funds they need. And that seemed like a much better business for my personality. So I did try it a couple other ways, and that it was enough for me.
Understood. I get it. I get it. So, you've made it your mission to simplify financing for real estate investors. What are the biggest pain points you've seen investors face when trying to secure capital, and how does Momentum Commercial Capital address those?
I think the biggest pain point is there's so many options that people don't actually know where to go. And if you just Google lender, it's like you get so many different things, and then this person says go here, or oh, I watched a Instagram reel and they told me this, and it's your experience isn't the same as that person that's making those reels. So it's always just figuring out what that client has done, what their experience is, and what they're looking for, and then taking them to the proper lender that will work with them on that exact project for their experience. So that's, I think, the biggest problem solving for me right there is connecting them with the lender that's looking for them as a client.
Right, right. Yeah, totally understood. So, also, you source both debt and equity for a wide range of asset types. How do you determine the right capital stack for a given deal, especially when investors are weighing returns versus risk?
Yeah, most people, clients that come to me already kind of have this number in their mind that they want to be at a 75% LTC, value. So usually on that, we can kind of talk to them, okay, this is, the number in their mind, and we'll go from there. And then if we kind of explain like, hey, on this kind of property, you're only going to be able to get 65, or on a development, you might be able to get 80 LTC. So it just depends on their exact project, but most clients already kind of have a number in mind that they're looking for, and then we kind of go from there with a lender who we think would work with that and say, hey, they will do that number,
Hmm.
or here's what we need to do. Maybe you need to bring 5 more equity, or we just kind of have massage the numbers to fit exactly. But most clients have a number in mind already up front on on their made pro forma, kind of where they're at.
Absolutely. Yeah. And anyone that comes to you for a loan that doesn't have that number in mind, definitely be wary of that. So,
Yeah, exactly. So we like to know, if you haven't planned that far yet, either it's probably your first deal, or you're just getting lucky till this point.
definitely. So, Gregory, as you know, interest rates have been, pretty volatile over the last, we'll say 24 months at this point. But how has the lending environment shifted over the last 12 to 18 months? And what strategies are savvy investors using to stay competitive in this higher interest rate environment?
Yeah, so I think interest rates are always a huge thing, and then everyone asks me for interest rates updates, and I'm like, if you have a deal, we'll talk about interest rates, because it's like changing so often. It's not even, me like to send you a quote or something. It's like by the time you decide to find a deal for this quote's probably outdated. It's no good. Like, so that kind of makes it hard where people want to know numbers, but it's like to do their underwriting, but it's like, hey, by the time you come up with your numbers, this number is going to be outdated. So that definitely makes it harder with the changing environment. And then the way I think people are making deals work, is just pretty much the same way they always have. Is that if the numbers work, the numbers work.
Yeah.
And I think the biggest thing is people get caught up in just always thinking about, oh, what's the interest rate? But if you have a deal that works, I don't think the interest rate should matter to you. I mean, it's just a cost of doing business. Is usually what I say, is that if your deal cash flows and you can make it work, you know, I think it's a deal. It's not really about just an interest rate to me, but I do know that's something people love to hang everything on. So
Yeah, yeah, we do like to hang our hat on that interest rate, but it's so true with what you said. If the deal works, it works. And if we're talking about uh a basis point, sure, it shouldn't really matter. 2 basis points probably still shouldn't matter, but anything above that, yeah, then you're starting to really dig into your profit and whatever it is that your business plan anyway, which could, definitely adversely affect you. So yeah.
yeah, I think another thing right now too, where the higher interest rates is it helps people that are good at what they're doing, because then when interest rates go down, well, everyone thinks that, oh, the interest rates are low, I can go buy real estate and be good at this. But that's not, just because the interest rate's low doesn't mean you're going to be good at buying and operating real estate. So I just think there's more competition when interest rates are low.
Hmm.
And now it's kind of like, okay, those people that thought they were good at something, when they bought with low interest rates, are finding out now, like, okay, the people that actually are good are picking off your deals that you thought were a deal, and now they're getting them for a steal, and they can operate it in a better way and make those deals work still.
Yeah, absolutely. And man, that was a super great point because something that I thought about as you were speaking about that is with interest rates being where they're at, this deal is making money that I have, right? So when the interest rates do go down, and let's say if I syndicated that deal, imagine how much better that deal is going to look and the cash flow that it's going to be putting off and the returns, the higher returns the investors are going to get. Thereby, you will then have an investor for life. If you're paying me way more than what I thought I was going to get, because, during the uh, webinar, when you told me I was going to get, let's say 16%, return on my investment, but now interest rates went down and you're still throwing that money my way, then all of a sudden I'm getting 22%. Soon as I get my money back from you after the deal closes, like, okay, I'm ready to put more money with you. I'm ready to park more capital. So that is definitely a great point. Yeah, if things are working at the higher interest rate, imagine how great they're going to be when they
Yeah.
lower and loosen up a little bit. Yeah,
They'll be calling you for the next deal. Say, hey, when's the next investment? You don't have to
absolutely.
call them anymore.
Definitely. So now, what do you predict will be the most lender favorite asset classes over the next 12 months and why?
I still just think it's going to be multifamily, just because the need for housing is so much higher. I mean, there are pockets I think that you can see where some somewhat have been overbuilt, but a lot of those are hitting the market now. But if you look at the timeline for the next builds, there are none. Like, there's been no development in a lot of these big cities that are like like quote oversaturated for now, but the absorption rate is so much higher than like what the pipeline holds, that I don't think that there's enough housing still, even though, yeah, you might have hit a little high point of housing right now, but those apartments and stuff are going to fill so fast that, and now there's nothing being built in a lot of these, like, and like Dallas Fort Worth I know is a huge one where there's just so many people moving, they
Mhm.
can't build housing fast enough for there. And I'm sure there's a few spots I can in Florida that are the same way, where there's no development because of these rates, so people have been like holding off developments. Well, now it's like the ones that we're finishing are maybe pushing the numbers up high, but there's going to be like this weird gap where, okay, the next 2 years there's no housing stock put into those areas to make up for these people that are still moving there. So I definitely think multifamily is just always, the biggest one.
Yeah, yeah, because that's the one thing about it. People always need a place to stay. And secondly, uh, the number, it fluctuates depending on who you listen to, that we're still between 3 million and 6 million short in housing units. And what are we going to do? You know? And so, yeah, definitely multifamily is still going to be needed. And you can't go wrong, like I said, because people always got to have a place to stay.
Yeah, that's the biggest thing, is people always need somewhere to live. So I think that is like, it's always it's an investor favorite, and I
Hmm.
think and people just like that because we don't always need retail centers, but we do need houses.
I totally agree. So, are there any emerging trends in capital sourcing that real estate investors should be paying close attention to? Perhaps something not yet on most people's radar?
I don't think of anything like real special. I do know some. I have a client that he does a lot of like BTR developments,
Hmm.
and so he is going to, he's working with a lot of government to get either bonds or tax abatements, which it's not really a new thing, but it does help his deals where he has like a 15-year tax abatement on a project in Ohio. And I mean, that tax abatement is worth more than, close to half the value of the development that he's doing, because if you're not paying taxes for that long, like, that's worth a lot of money. So his plan is to essentially hold it for 10 years and then sell it to someone else. So then they'll still benefit from, 5 years. So, he shares a little bit, but he's getting most of the benefits of doing that development. So that's probably the biggest thing I've seen lately, but I don't think that's like a, super new strategy, but
Yeah,
definitely
yeah.
for areas that want the housing, I think the government is, working with those government agencies
Mhm.
and providing what they need, I think is going to become more of like a larger play. But
Yeah. Okay. So, for newer investors looking to scale, what should they know about presenting a deal to a lender in a way that builds confidence and credibility?
I think the biggest thing is showing a track record of what you've done. So say maybe if you've never done a multifamily, but you own 5 to 10 single families or a couple duplexes, they're still considered single families, 1 to 4 units, but showing that you've done this before on a smaller scale always will help a lender, as opposed to just going and saying, "Hey, I got a bunch of money. I'm gonna buy a 20 unit." The lender is still gonna feel uncomfortable just because it's new to you. Even if you do have a bunch of money, they're like, okay, he'll probably be okay, but they're gonna have better comfort if you can show, hey, I have a track record even doing this on a smaller level, and now I can go to these bigger 20 unit, 30 unit, whatever you want to go to next. Uh, so I think the track record is the biggest thing for any lender to get comfortable with you, especially with now there's almost like zero in-person one-on-one meeting with so many people. It's just like over the internet. So if you can just put up, a track record like, hey, look, this is what I've done. It's like instant warm fuzzy from a lender to be like, okay, I can verify this. I see he's on this title. Okay, yeah, this guy's legit, or he has some experience. I think that.
Yeah. Can you talk to, since we're on the credibility piece, can you talk to borrowing someone's credibility?
Yeah, absolutely. This is the biggest thing I talk to a lot of people about when it's like, hey, I want to do these big developments, but I've never done it. And I'm like, well, what you should do is you just co-GP with someone that has done these deals before, and most people are like the experienced person. They were in your shoes at one point too, so they're not gonna just be like, no, I don't work well with others. Like most people understand that working together is gonna be better for everybody. So I think some people get scared of thinking like, oh, I don't have enough experience to talk to somebody with experience, but a lot of people with experience want to share their experiences with someone that's like hungry and motivated to grow. So they'll want to work with you, especially if you bring them a deal and say, "Hey, look, I found this project. I'd like you to help me get this done." And you will make money and I'll make money. They're not going to be like, "No, thanks." Like, they got to where they were by making money and working with others. So they're definitely going to be open to working with you. So I always recommend people, if they've never done something or they're like new to something, finding someone that's in that area and co-GP them or partnering, however you need to do that, and borrowing their experience.
Yep. Yep. Totally agree. So, also, can you walk us through a time when you had to get creative to structure a financing solution for an investor with a unique challenge or constraint?
Okay, yeah. So I had a client that was building a, yeah, 178 unit it was in Connecticut, and they bought this land like 3 years ago. They paid cash. They put some money into it. They've done all the horizontal. Now, like on a loan, they don't want to put any more money in. They're just, okay, we're over putting money into this property. Please, someone just fund this and let us do the vertical. And so what we were able to finally do is we found a lender that would give them the land lift. So instead of it being worth, the five plus they put like three into it, so it's eight. Well, the lender was able to say, hey, now this land is worth 12 million because of the improvements and they got all the entitlements. And so they were able to use that as their equity and essentially collateral the land. And then the lender brought in all the money to do the vertical. And then they did have a little layer of PACE financing, which is a little bit unique, but they were able to get that in there, and so they didn't have to put any extra money in to finally get this project going. So
Wow. Wow. Yeah, that now that right there, that was definitely creative, you know. And I could I'm not a developer nor have I developed anything, but I could just see where, at a point you're like, okay, I'm just ready to start building. Like, let's go already. Find me the money and the
yeah.
person that's willing to bank on me so that we can get going. Yeah.
Yep.
Yeah. What are some of the misconceptions real estate investors have about working with capital advisors or mortgage brokers?
Well, I think a lot of things, well, it always comes down to your fee or is there a fee, which we work solely on a success fee. So we don't charge anything up front and you're only going to pay us when we get you what you need done. But another thing is I think that people think that a broker's only out for a broker, but like to me, I'm not just like I don't make money on every person I touch. It's like sometimes, hey, I'm more valuable to say, look, this deal would be better if you just went to a local bank. Like, I don't want to make that connection. Just find a local bank and you'd be better off there. So I think just helping them and advise them on like the best solution for them may not always be me. And I'm okay with that. But you know what that works is that as soon as that local bank runs out of funds for them and says, hey, we can't lend anymore, you've hit your limit, they're probably going to come back to me and be like, hey, you helped me get this far. Can you take me farther? And that's when it's like, hey, we can take you to a debt fund. We can take you to a family office or anything, outside of the normal, like, these people think of banks, credit unions, local, but anything beyond that, because I have clients that max out their local lenders and it's like, hey, what do I do? Well, that's where I think a broker can really fill the role because otherwise, it's just a lot harder to just Google debt fund and how do you know if it's a credible lender or hey, does this seem normal? I've never worked with this kind of person before. Like the banks don't do this. So that's where I think, you're borrowing my experience of working with the debt fund as opposed to a bank. So now it's like that's what makes it more comfortable to my client as opposed to them just finding a debt fund and being like, man, I hope this guy is legit, or I hope they do what they say they're gonna do. So I think that's the value that we can add to our clients.
Oh yeah, 100%. And that is so true because, you know, a person as an investor, you not only you're looking for a genuine person, a person that you like in real estate as an investor. When we're looking for investors to invest into our deals, right? Investors are looking for people they know, like, and trust. And it goes the same way with a commercial with a lender, somebody they know, like, and trust. And if you tell me that, I can do this deal for you, but it's going to cost you this. But if you find that local lender, right, and it's going to cost you this, like, why wouldn't I come back to you, like you said, when that local lender runs out of capital? Like, yeah, Gregory, I remember when he told me to come over here. Yeah, that may have been, I don't know, 5 years ago,
Yeah.
but guess what? Let me go back because I need to grow. And I'm pretty sure Gregory still got capital, probably have grown even more. So
Yeah.
yeah, yeah. And most people, I don't know if most people would do that. So
Yeah.
that goes to the character of the person. That's huge. Yeah. So of course you work with both acquisitions and refinances. What does refinancing not make sense for an investor, even when rates might seem favorable? When does refinancing not make sense for an investor when the
Uh,
rates might seem favorable?
yeah, I definitely think this is a like a kind of like a topic lately is that okay, people see these rates get cut, a little bit, and now all of a sudden people were like, oh, should I refinance? Should I refinance? But like there's no real benefit to rushing to refinance. Well, one, if you think rates are going to go down more, so that's a big thing. And
Mhm.
two, if you haven't finished, say, all real estate's value add because I don't think anyone buys real estate to not add value. So, but I had a client that was coming back and he only owned the property like a year and a half, and he was trying to refi, and then because the rates had been cut, but he still wasn't finished raising the rents to market rent, and I'm like well, you might not want to do this right away just because, yeah, you're gonna put some more cash in your pocket, and I guess you could go buy another property. But if you wait another 6 months to a year, get those rents all the way up to where, their market rate. And then also interest rates might have got cut another 0.25% by then. So it's going to help. You're going to get a little more cash. You're going to have a higher valued property. So just because they start cutting interest rates, I don't think that's just the only reason you should think, oh, time to refinance. Like there's a lot of different factors of like, hey, have you stabilized the property where you think you can get it? Have you cut as much expenses as you think you can? Like if you're still working on those items, the interest rate doesn't really matter if you can still keep increasing NOI, which will then increase the value of your property when you go to refinance later.
Oh, I like that. Yeah, I like that. Wow. So, of course, you served as a loadmaster in the U.S. Air Force. What lessons from your military experience have shaped your approach to leadership and problem solving in the finance world?
One of my favorite things I when I so when so the Loadmaster flies on the airplane. It's a C-130. It's a cargo aircraft, and the biggest thing about flying is everything is a checklist. Like I think pretty much like 99% of aircraft mishaps are human failure because
Hmm.
they have made it where you essentially cannot make a mistake unless you choose to make a mistake. So I like to take those checklists and items like that and make my business the same way where, hey, it's this kind of property, this kind of loan we're looking for, and I'm like, perfect. Here's the checklist of items I need. Boom, send me these 8 items, and I can get you a quote. Or oh, it's a fix and flip. Okay, send me these 12 items, and I can get you a quote. Like I've kind of just made it so it's a simple checklist depending on which kind of property we're working on. Because I just brought that from the air crew mentality, and I'm like, I just like the checklist. Hey, you forgot this one item. It's easy for me to tell. It's easy for you to know what you need. Here's the checklist. Oh, one is missing. All right, hey, don't forget this one. Send it back. Okay, here's your quote. Let me know if that works for you. What do we need to adjust? Let's have a conversation and go from there. So I think checklists are like the biggest thing I've taken from the Air Force that I just love checklists.
Yeah, for anybody who out there that's listening that have not been in the military, that's definitely the one thing that the military definitely has. They have checklists and just like Gregory said, so that you don't make a mistake,
Yep.
because it's easily easy. You could do this thing, this whatever, this repair, for instance, for me when I was in the military, 100 times. You could do it day in and day out, 100 times. And you think, in your head, it. You're like, okay, I don't need that. We called it a PQS card. I'm dating
Okay.
myself, but anyway. Um, and then you just go into it. But they have those for a reason. They have them so that you don't foul up, mess up. You don't have to rely on muscle memory. And so that's definitely a huge, 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 huge point that you mentioned about the checklist, you know.
Yeah. Yeah, it always helps me too, not just for one, it makes me look real professional to my client, but then when I send a loan package to a lender, they're like, oh, this is coming from Greg. He has everything I need every time. I'll look right at this right now. And so that's a benefit too. This probably goes back to talking about, okay, what does a broker provide? Well, I know what a lender is looking for, where you're gonna come up and be like, hey, what do I need to do this? And then it's like this piecemeal, and your lender is gonna get tired of communicating back and forth with you, trying to dig every item out of you. Where if you go to me, hey, I'll hit you with the list. I'm gonna bother you till I get that full list, and then I'm gonna go to the lender when I have the full list, so they get the full package day one. Hey, here's the property, here's the project, here's my client's information, here's everything you need. Will you do this? Here's the numbers they'd like. Okay, perfect. And then that makes the process a lot simpler. So now my lender or your lender is not sitting there trying to figure out every item from you. Your broker gets to deal with that. And that's why we get a little fee.
But no, but that again, so true because this is real quick. I'm just gonna digress a little. My wife and I, we're in the process of getting a house built. So we had this one lender um that I found. And so anyway, it was like pulling teeth with them. Like, what else do you need? What else do you need? Like literally every week, oh, we need this thing. I'm like, why don't you just send me the full list of everything you need and I can get it to you ASAP. instead of, like you said, piecemealing to me, like, here, we need this. Okay, now I got to go get that. Like, the process would have been a lot smoother had they just sent the full checklist of items that they needed.
Yep.
Yeah,
Yeah, it just makes it so much simpler for my communication, the lender's communication, and for my client. So it's like there's no back and forth of like, what's next? Like, oh
absolutely.
hey, surprise, we need this too. Oh wait, we need this also. Like, here's the items. We need all of them.
Yeah,
Send them to me,
yeah,
please. Okay, you missed one. All right, we got them all. We'll submit this.
right, right, right. So, you mentioned having a passion for helping clients, community, and family. How do you integrate those values into the way you do business day to day?
So my biggest thing I would say is that when I get a client, if even if I can't help them through, getting funding through me, my goal is to make sure I get them to the right person because just helping connect somebody, well, now instead of helping this one person, well, I'm actually helping two people now. So it's not always just about me and how I can make a fee. Sometimes it's just, hey, you don't really even need me. Here's, Joe, talk to him. I'll just, loop him in the emails, usually what the easiest way have found. So I just connect them on an email and say, hey, he does retail. You're looking for help with retail. You have a large pipeline of projects. Joe's looking to invest in retail. I think you guys should connect. And he's done this a lot. He probably has better lenders connections that are comfortable. And just go right through Joe. Just move on. And then just doing that for me is like, I mean, just paying it forward. Like, I'm not gonna make a fee on everything I touch, but that's just somebody that maybe down the road they're at a real estate meetup and they go, oh hey, they meet someone that needs a lender and they can't find one. They might remember me. So I'm like, I just like to make connections wherever I can and try to help, any way I can, whether it's just finding somebody debt or just helping them connect to the person that they were like quote looking for, but they didn't know they were looking for.
Yeah, yeah. No, sometimes it's just about being a connector. It's not always about making a buck on a deal. It's
Right.
like connecting two people together. Just I don't know. I think it was before we even started where I mentioned, me, the guy in California who had 80 units in Cincinnati, and my friend who I knew who lives in Cincinnati and had a pulse on Cincinnati. I connected those two people, and now my friend who's in Cincinnati is now a GP just because he's boots on ground there and can control the controllables there for that portfolio of deals that the gentleman who's out of state in California has.
Yeah, that's a perfect way. And then yeah, maybe you didn't make any money from that, but the biggest thing you're making is relationship capital. Is those people now like you because you helped them grow. And then it's always going to be in their mind to, hey, I want to help him grow when the opportunity comes.
Yep,
And maybe it doesn't ever come, but it always makes you feel better and it always is nice helping people out when you can.
100%. Yes. So you told us about the deal in Connecticut a little while ago. So without naming names, of course, can you share an example of a deal that might have died if not for the right financing strategy and what you did to make it work?
Okay. Hmm. I've so like I have a client that's they're doing like land development seems to be like the hardest thing to finance right now because no one wants to buy raw land or finance raw land. So
Okay.
these are probably some of the hardest deals. But I had a client that was he has so this is another reason to make sure you vet your funds you're working with. So he has a fund that financed his loan and now is trying to foreclose on him to take the property because it's worth so much money and he only has a $12 million loan on a property that's worth like 32 million now.
Whoa.
And they want the property now. They've figured out like, hey, this would be better for us to take the property than have this guy pay payments. And so,
Absolutely.
he's like in a panic because he needs to find a lender to refinance. But this is a deal we were getting closed for and then land's always hard. So that one would probably, and honestly, we're like essentially solving a $12 million problem for this client that he's, it's 12 million that he owes, but it's a $30 million problem really if you think about the value of the property that he would have lost if we weren't able to get this refinanced for him. Now that's a time when a refinance is important. So, but
Definitely important on that case right there.
yeah,
Man, that's huge. I mean, I couldn't even imagine losing that deal because in that investor's mind, he knows he's sitting on about $18,000, I mean $18 million in equity,
yeah,
and to lose it, oh my goodness. Hey, good thing he found you and you guys are able to get him the refinancing he needs. That's
yep.
huge. Oh my gosh. So for investors interested in development or repositioning projects, what's different about securing financing for those compared to stabilized assets?
Yeah. So for development, the track record is like the thing. Like that's what you need to have. Like a lot of lenders won't even look at your deal if you or one of your partners have never done development. So I would say the biggest thing on development is a track record of having you know done some kind of development or bringing a partner that has done some kind of development. So that one I feel like if you're not willing to work with others, you should just stick to stabilized and just to purchases because I feel like on development you have to be open to working with others to get that experience.
Mm, all right. Now, how do you help your clients assess and compare financing offers from different lenders to avoid, like hitting risks as well as long-term costs?
So the easiest way is so what we'll do is we'll depending on each project, you have a few term sheets, and then we'll just decide like kind of like once we have a few conversations, well, one, what is most important to my client? Like, is it the maximum leverage, or do you have enough equity investors that hey, we don't need the maximum leverage, so we want better rates or different things like that. So it's always different depending on what the exact client need is. But I would say leverage is usually the number one. Most people want the highest leverage, and so that way they have to raise the least amount of equity, and also your returns always look better when you have higher leverage. So I would say leverage is number one for clients like looking, but that's kind of what we will just help them sort through the term sheets. Like, hey, you can get 80% LTC here or 75. Oh, but this guy's going to charge you 4 points origination. So do you really want 80 if they're going to charge you 4 points, or oh, at 75 they're only going to charge you 1.5 point. So you could just take, depending on the deal size, you may just take your 2.5 other points and put it towards the 75, and now you're pretty much close to 80. It just depends. And that interest rate's probably better. So just kind of playing with the numbers and what is the exact goal you're going for. Oh, this it's always a unique client, discovery kind of conversation.
Okay. Just as we've been talking, I can tell you're a student of your craft, and you're very knowledgeable about it. So what drives your passion for continuous learning, and how do you stay ahead of evolving market dynamics in the real estate finance?
I definitely thank you though. I just like problem solving, and I feel like a lot of it I was always interested in finance from like being a little kid, and now it's just always problem solving and how can we it's never like, oh hey, that deal's not for me. It's just how can we make this work, and what structure do we need to make it work, whether it's bring more equity or find a different lender. I don't know, it's just always like a cool problem solving, and then when you can be like, hey look, we got this for you. Like I just like to see like the client like, oh man, he was really able to come through for us and do stuff. So that's probably also why I like the development a little bit more, just because it is more unique and a little bit harder to do, but there's
Mhm.
also not as many people that want to do it because it is harder and more unique to do as opposed to just like an agency loan. But I just think the problem solving and helping get those like unique deals done, I just like them.
Nice, nice. So, what advice would you give to other veterans who are thinking about transitioning into real estate or finance?
I would say go for it because it's a great industry, and I always think that people love to work with veterans. I always get that like, hey, that's awesome. And so people like that. And if you show proof that you're like driven and want to succeed, most people are willing to help you get there. Whether you go and work for someone for a year or two or a couple of years, or maybe you start and you're like, hey, I'm gonna pick up experience and then go do this on my own. Well, you may end up really liking that person and then just stay there and just have a good career with them. But I always think that people love working with veterans if if you can show that you're like motivated and want to learn. So I would definitely go into the industry if you have a slight interest in it.
Nice, nice. Man, time has flown, time has flown. But before we end this interview, tell our listeners a little bit more about, your backstory, like where you grew up, um, and what led you into finance, and what led you to join the military and things like that.
Okay, yeah. So I grew up in Northeast Ohio, a little bit south of Akron, and pretty much everyone knows of Akron from LeBron James. So I didn't go to school with him, but I do know up close to the area. But and then I just always grew up liking finance, and then so I'm in my 30s, but it's just hard to find like where do you go to do this? And at the time, I didn't really want to go to college, so I just figured if I went to the military, maybe that'd give me some time to figure out what I wanted to do. And then so I went to the military. I actually got out and worked as I used to build power lines. My brother built power lines. I did an apprenticeship, which I like that hands-on learning. So maybe that's what also drives me to want to keep learning is I like the hands-on. I'm not a book person, but so I built power lines for a while, and then I had a family, and I'm like, okay, I need to stop trading my time for money, and I need to find a way to, have a skill that I can make money off of that's not just time based. And so that's where I started my business on finance because I'm like, hey, this is something I like and it's going to make me better when I'm interested in it. It's easy when everyone's like, hey, you're really good at that. But it's like they don't realize, like, well, I'm interested in it. So I want to learn everything I can. Like, it's easy for me to be good at something I'm very interested in and want to learn more of. So that's kind of what brought me to doing this. And then I just like real estate. My girlfriend's a real estate agent, so it just runs in our family. I guess that now we have two kids, two boys, and they'll probably like real estate too. I think just because of the influence of their parents.
Right. Yeah, absolutely. Absolutely. So, um, what strategies would you recommend to someone who's listening to this interview to get started in being a commercial broker, a finance broker?
So the easiest way I would think is start looking at some maybe if you've heard of like DSCR lenders. There's a bunch out there. I mean, RCN's huge, Lima One, but you can go on to their site and just become it. It doesn't really take much to become a broker through them. They're pretty easy to get signed up. You have to start a company like a LLC, like something like that, and then you could just start going to like either your local real estate meetups or local or anything that's like a real estate event that you're interested in. And then once you establish your business, just say, hey, I'm a broker. And then, yeah, your first few conversations are going to be hard because you don't really know what you don't know. But the
Hmm.
more you learn and the more you're interested, like, and the more you keep seeing these same faces and say, hey, yeah, we're a broker. And I mean, you don't have to say what lenders you go through or what, however you want to, do your business. But that's the easiest way. I mean, this is probably one of the easiest ways to start up. Now, it's not easy to be successful, but if you stick to it and keep learning and growing, then people will see like, hey, this guy knows what he's talking about. He's here every month. Okay, I'm gonna take him my next loan and see what kind of quotes he can get. But honestly, it's a pretty easy business to get started in, and then it's a lot about relationships after that. And then to get deals done, you need to, just keep growing your network and connecting people, I think is the biggest thing after that.
All right. All right. Well, Gregory, it has been a blast having you as our guest today. As we close out, please tell our listeners where we can learn more about you, get in touch with you, and learn about all the fabulous things you have going on right now.
Okay, yeah. So the biggest, easiest way is probably through our website. It's momentum-commercial-capital.com, or you can email me at greg@momentum-commercial-capital.com. I didn't think that
Awesome.
through when I made that website, so someday I will shorten that.
It's always hard, man, when you're trying to figure out those minute details starting a
Yeah,
business. Trust and believe me, it is really, really hard. Those
yeah.
names, they're very hard to come by. But
Yeah,
hey,
so if you start your own business, come up with the shorter name for your email and your website's probably a good suggestion to start with.
100%. Awesome. Again, Gregory, I want to thank you for your time today and all the wisdom you have provided to my listeners. It's greatly appreciated. And I want to thank you, our fans, for tuning in to the Service to Syndication Real Estate Podcast, where we want to add value to you in your investing business. Please tune in to our next episode where we will interview another fantastic investing professional. See you next time.
Thanks for listening to the Service to Syndication Podcast. We want you to know that we love and appreciate your support, and we are grateful about being a part of your journey to becoming a successful real estate entrepreneur. Please share this episode with a friend who you think will get a lot out of what you just heard. Send it to someone who you know is interested in real estate and dreams of having it all and being the best they can be in all areas of life. And if this was really valuable, share it on your social media stories and timelines. Thank you for watching and listening. Now go be great.